The broadcast is now starting. All attendees are in listen-only mode.
Okay, let's do this. All right. Good afternoon, everyone. Today is November 21st. It's about 10 to 1 Chicago time. I thought I would open up the room a little bit early just to give a brief introduction and go over the disclaimers that I have to present before I talk about markets and our topics. So the game plan for this afternoon is number one, I'm going to go over the disclaimers. 2, we'll go over the trade setup in slow motion. So I'm going to break down what Michael is doing in the training room in about 3 or 4 simple steps. Okay. So we'll break that down, and then what we'll end up doing is going inside DtPro. That's the platform I'm featuring, and the platform that I support, and we'll look for that same setup in a live market environment. The idea is to identify that trade setup and then go inside the DOM and execute some trades, okay? I'll show you where to enter, how to place stops, and then the money management part of it, okay? And then when to exit. So we'll break that down. And then along the way, you can ask questions, okay? So the idea really is for those guys that are brand new, this little cheat sheet here will be a good syllabus for you to lean on, okay? We'll also set some expectations on, hey, this is what I'm signing up for, or this is what I should expect in the training room. This is the kind of education or kind of the curriculum that I'm signing up for. So I'll give you an eyes wide open approach on what to expect. Okay, and then, like I said, we'll get inside a live market, and I'll make some observations. Some of the observations that I make are some of the traps that people fall into. And that's just being in the room every single day for the last 8 or 9 years. Okay, so there's some things that same tendencies that people tend to do, and I'll bring those to your attention. So if you are spinning your wheels, or if you are a current CFRN member and you got questions about it, then I'll knock those things out too. Okay. So again, we'll hang out for about an hour. Okay. If markets are cooperating and they're moving, hey, we'll see a lot of good stuff. If not, we might just watch paint dry. But I think in the end, if you're brand new, this will give you a good starting point. Okay. And then again, CFRN members that are hanging out in here, this is more screen time. This is learning the personalities of the markets that we're trading. That's all good stuff and part of your learning curve. Okay. It doesn't happen overnight. Okay. So it does take time. So that's what this is all about. Okay. So, before I get started too, this is live. So if my phone starts buzzing, I'll put you on hold and hit the mute button so you guys don't hear me rattling off account numbers and placing orders. So I just want to give you that advance warning before that happens. All right, disclaimers, because I have to talk about disclaimers before I present. Basically, I don't like to just throw this up and tell you to take a look at and put it under the blanket. I'll take a few minutes to go over it because I've been around for almost 25 years and I really have seen the good, the bad, and the ugly when it comes to trading. And if you don't have a trading plan, if you're not using stop losses, if you're not engaged in the marketplace, if you're not in tune with what the news reports are for the day, if you're not looking over your trading account, this disclaimer is going to hit you right smack dab in the face. Okay. The disclaimer really is for the brand new guys, the guys that are just getting into our space, wondering what the heck is this futures market is all about. So that's why there's this warning label. You'll see on any website or any email that I send out always has this, and it's It's because if you don't have those 5 things, those 5 simple things, it says basically you can lose everything and some in your trading account if you're not using those simple principles. All right. It's a reality of the markets that we're trading because we're dealing with leverage here. And it's great when you're on the right side, but it could be real ugly if you're not. And so that's why we talk about it. Okay. All the emails that you're probably getting right now are, how you can get rich quick and all this other stuff. And it gets really highlighted, but the risk portion of it doesn't get brought to the table. It's not really balanced in a lot of that stuff that you get from other places. Believe it or not, I'm bringing it to the front before we get to the stuff. And I bring it to the front because this is an eyes wide open approach, right? And it starts with the risk associated with trading. Okay. It's not a great way to start the webinar, but that's the truth about trading, and that's what I'm about. So it also says here, and it's highlighted, past performance is not necessarily indicative of futures results. That's highlighted for a reason. And the other thing is the funds that you're putting into a trading account should be risk capital. It should be funds that you can afford to lose, and it doesn't change your lifestyle. You can still pay your bills, basically. Okay. I know people don't like to lose. I don't like to lose either. You will have losing trades. That's just the truth about trading. But the fact of the matter is, this should be risk capital. So that's kind of what we talk about here too. All right. All right. Next slide. My relationship with CFRN. Okay. Here's me over here, Bert with Daniels Trading. Okay. Bert doesn't work for CFRN, and CFRN doesn't work for Daniels Trading. There's actually a brick wall in between us. Okay. It's their tools. Okay. It's their indicators. They're the educator. They are a third-party trading application. Okay. So we have a relationship, but we're not working in cahoots with each other. Okay. They don't get paid. We don't get paid if you do business with them. We don't share on commissions and all that other stuff. That's a big no-no. The good thing is they've never asked, so that's a positive. But there is a fine line, okay, and we don't cross it. And the big thing is like I said, I support the trading platform. Okay, so this is the platform that I'm featuring. It's called DtPro. It has all the bells and whistles. You don't have monthly platform fees. Yes, you pay for data like everyone else does. And it's the same platform that Michael and Dwayne are using inside the training room. Okay. You have access to this platform. Okay. If you take the trial you can take a trial of the platform for 2 weeks. The indicators are yours to test out for 5 days. Okay. I have videos on how to download it. We can do a one-on-one GoToWebinar to get you up and running. If you take the trial of CFRN, you are going to get an invitation to download the platform and download the indicators. With a few left clicks, you can have the indicators up and running. Okay. And like I said, if you run into any snags, you can just call me or shoot me an email. Okay. So I'm always here to support you, and I support the platform. Okay. Ultimately, if you decide to go down the CFRN path, and you'll have to open up a brokerage account. If you decide to use DtPro, okay, I'll handle the brokerage side of it too. The account application, the execution, the trading account. I'll be your eyes and ears in the background here if you run into trouble. So again, that's kind of my role. If you run into problems or have questions about anything on the CFRN site or the Thursday night workshops, you might have a question about Logic 247 or the concierge trade alerts, you would reach directly out to Michael, Dwayne, or even Valerie. Okay, so you can reach out to them directly. If sometimes after the training room, Michael. That's what Michael does. He's in the training room in the afternoons. Dwayne is on the radio, and he's doing the Logic 247 and the concierge trade alerts. Sometimes they all get busy. So it is fair game to reach out to me and say, hey, I'm trying to get a hold of Michael and Dwayne. Could you shoot him a text or shoot him an email or give him a call and him call me? That's fair game, okay? So someone's always around, and that's the beauty of this, okay? I know a lot of people like to push their own buttons and trade their own stuff, but in the end, if you need support, okay, you can call me. I'm the guy that's going to pick up the line here. Okay, so if it's about a setup or the platform or about trading in general, you have a live body to talk to. And that's comforting when you're learning a new system or a set of rules, and you're on your own. So you're going to get spoiled here at the desk. Okay, so that basically is basically that's what this slide outlines is our relationship for in a nutshell. Okay. Back in the day, our relationship started like 10 years ago, I think. Dwayne and I somehow got connected, and he said, hey, why don't you come on the radio program? And this was before, this was just when it was just radio. And I was just down there in the afternoons for about an hour, and we were just talking about markets and answering questions and, just general stuff, just about trading. And the one thing that I noticed along the way is people kept asking Dwayne, hey, show us how to do this. Show us how, show us how, show us how. And I think in the end, he just got together with Michael, and they're both TradeStation developers. And I happened to be in the right place at the right time because our platform, DtPro, reads easy language. So you can code inside the platform. And so it was great. It was kind of a great fit. And so they had a platform they could offer. It's free. At the time, there wasn't any data fees, but yeah, absolutely free. And it was a good way for people to get their hands dirty, get their hands on a platform, get dirty with the indicators, and really dissect, what they were offering. So it's kind of how it started. So, and now, 8, 9, 10 years later, they're still at it. So that's good news. Now, there's my phone buzzing. So one sec. All right, so I'm back. All right, I told you that would happen, so that's going to happen from time to time here. So basically, that was my short story on how Dwayne, Michael, and I got together, and like I said, we all got our little roles. I'm doing CFRN Thursday, and I'm trying to help guys understand what's going on, and Michael's doing the training room in the morning, and Dwayne's doing the radio and the logic and concierge trade alerts along the way. And then Valerie puts it all together, and she runs support for them. So it's it kind of works out actually. So all right, so that's it for disclaimers and all that stuff. So we're going to go into the trade setup. Okay. So if you are brand new, this is again going to be your cheat sheet. All right. This is the setup that Michael is doing inside the training room. Okay. He's doing it, and fast forward. Okay. We're just going to we're going to break it down in slow motion. So this is the typical traditional slingshot setup that's been around from day one. In fact, I took the screenshot back in 2012. So, nothing's changed. Other indicators have been developed throughout, but this one hasn't changed from day one. Nothing's been changed to form fit the market. That hasn't changed. It's just along the way, people had made some observations about this or that, and this, and they've kind of developed into different trading strategies. But this guy's been around from day one, so I don't know why we kind of veer off the path. I would just stick with this one, but that's just my opinion. First order of business is to get you on the correct time frame. We are on a 4-tick range chart. Okay, so if you have DtPro, how do you get the 4-tick range chart? Well, my gut feeling is you're going to probably be on a more of a time-based chart. You might be on a daily. If you're following logic, you might be on a 30-minute chart, right? You may even be in a 5-minute chart if you're following the logic 247. What you want to do is next to the time frame, there's a little drop-down box here. Left click on it and go down to custom. Select range bar and make that one look like a 4. Okay, that'll get you on the correct time frame. Okay, so you're staring at the ES right now on a 4-tick range chart. Okay, what that means is the height of each candle is 4 ticks in height. Some look bigger, some look smaller, but they're all 4 ticks in height. And that's important because what you're going to hear in the training room, Mike, in some cases, will be proactive, we'll call it, or predictive in placing his orders. Okay, the fact that we know that the height of each candle will be 4 ticks in height, no matter what he can do is he can end up placing orders in advance. So in other words, what you'll hear is you'll start hearing him call out the current highs and low of the bar. So if this was this is the bar we were staring at right now, okay, he would start calling out the highs and low. If all the rules are in play here, okay, he'd start calling out the highs and lows. So the current market price is right about here. If we're staring at the DOM, well, of course it starts moving, but this is where it's trading at. Okay, so what he would end up doing is he'd place an order above the market if we're in a bullish scenario and potentially buy it on a stop. So if the market takes off, he goes with it. Or if he has a bearish setup, what he ends up doing is he'll place a sell stop underneath the market. Okay, so if the market does break down, well, he's going to stop himself or enter the market on weakness. Okay, back in the day, what I would notice that we'd get a runner, and everyone would say, "Whoa, wait a minute! How did you get into that one, tough guy?" And this is the way he was doing. He was buying it on the stop and selling it on the stop, and it's an unusual way to do it because people really don't understand that. They're just learning, and they just associate stops with stop losses. But yes, you can enter markets on stops, and that's what Michael's doing. And you'll hear that a lot in the training room. So we're on a 4-tick range chart. And again, the reason for that, and prepare yourself, is, Mike is going to call out the highs and lows, and he's preparing himself to place an order above and below the market. So the idea of the webinar is to give you an eyes wide open approach, and this is one segment of it. Okay, so we're on a 4-tick range chart. That's the long-winded explanation. Okay, now the first trap that people fall into that I see is they get to this time frame. Okay, they might be on that 5-minute. They go down to custom. They're doing all the right things, and they select a tick bar. And make that 2 look like a 4. There's that same ES chart, but on a tick bar. If you're staring at this, you're wrong. Okay, so it needs to be on a range bar, and the little R here in parentheses is kind of the tip. Okay, that'll let you know you're on the correct time frame. Okay, so 4-tick range. All right, now we are going to talk about the setup. Okay, setup 101, basically. All right. So here we go. Some buzzwords and things that you'll hear in the room, I'm going to go over right now. So this red and blue line is referred to as the MA1. Okay, nothing really fancy about it. It's the moving average one. Okay, the green line is the BBC. That is short for bullish and bearish cross. Okay, and together that leads us into step number 1, which is this. When the MA1 crosses the BBC, or that green line, okay, if the MA1 is red, that's called a bearish cross. If the MA1 is blue and crossing the BBC, that's a bullish cross. So the one that's highlighted here, okay, is a bearish cross, and the reason is the MA1 is red. Okay. Now note, okay, that by the way, step 1 kind of lights the match. Okay. Once you get the cross, then you're kind of focused. Okay. Now you have to start looking for the setup. Okay. And I want to make a point here. I didn't say go short, go long, and go short when we get the crosses. Okay. What we're doing is at that point, we're looking for a bullish or bearish or a selling opportunity or a buying opportunity when that happens. So once we get the cross, and in this example, this is a bearish cross, we're looking for a potential selling opportunity. Okay, because step 2, that kind of leads us into step 2, which is after the cross, the normal thing for the market to do ultimately is to gravitate toward that BBC. That is what we're looking for. Okay, we're looking for the market to gravitate toward the BBC. We're looking for it to touch it, because that's a normal, but then we're looking for a close in the direction of the trend. What is the direction of the trend? It's down. Why? Because the MA1 is red. If the MA1 is red, then you're looking for a red candle, a down close. What you're going to find out in the end is when everything is the same color, that stacks all the probabilities in your corner. Okay? So remember that. Okay? You want everything the same color. So the match has been lit. Step 1. We're looking for the normal thing. We're looking for the market to gravitate toward the BBC. It touches it here, but then we get the down close here. That is step number 2. Okay? Now, before we get into the slingshot, because when step 2 goes into play, our eyes are going to gravitate toward the oscillator portion of the chart. But before I do that, I want to go over one other thing. In some cases, okay, this is normal, right? In some cases, the market will not do the normal thing. It's got so much bullish or bearish momentum, it won't get back to the BBC. Okay, it does one of these and then it falls. It does one of these and then it falls. Okay, what you're going to learn, okay, and it might not be on day 1, is as we gravitate toward the BBC, you're going to get in the habit of drawing trend lines along the way. Okay, so in the training room, you're going to see a lot of trend lines being drawn. So that's something that's going to be a habit that you're going to get. You're going to have to learn. Okay, good discipline. All right. So as soon as you get the cross, the next order of business is to activate the trend line and start drawing as we gravitate toward that green line. Because we never know if we get there, right? It's only after the fact you don't. Okay. And there's some set of rules. Okay. There's reasons why. One reason is we never know if it gets back to the BBC, right? And if it doesn't, and we have, step number 3 in play, which I'm going to go over shortly, then there's action to take. Okay. And then there's a little curveball that comes with that, which I'll go over. Okay. So, step number 1, bearish cross. We're looking for a selling opportunity. We engage the trend line. Okay. We're looking for step number 2. Step number 2 is for the market to gravitate toward the BBC, and we're looking for the down close. We get that there. Our eyes then gravitate toward the slingshot. Okay? The trade exists down here in the slingshot. Okay? I'll tell you why. The red and blue line is referred to as the cycle. What the cycle is telling you is this. Dude, the momentum is bearish, right? The cycle is red. Is red good for the home team if we're getting short? Yes. Why? Because we said when everything is the same color, okay, that stacks the probabilities in our corner on this trade setup. So what this is saying is the NASDAQ on a 4-tick range, the momentum is bearish. So we should be looking for sells, right? This green line together with this price action here, which is normal. Okay, the green line pulling away from the cycle together with this price action above is saying, look, this is a pullback in this ongoing downtrend. And if you get the down close where it's supposed to stop, and we have this separation or divergence, okay, there's step 3 in play. We have this space in between here. Okay, that's the separation or divergence that Michael is talking about in the training room. Okay, when that's present, step 3, that box is checked off. Okay, so that's it. The 3 rules are in play. And then when that happens, there's nothing else really to do but to go inside the DOM. Okay, and what is the DOM? If today is your first day on the job, it's this thing here. It's a tower. This is where we do our buying and selling. If we think the market's going to go up, we're going to left or right click in the green. If we think the market's going to go down, we're going to left or right click in the red. Okay? There's nothing left to do. We go inside here and we take action. That's what we're doing. Okay? So, now, why does the trade exist down in the slingshot? Okay? We said this is telling us the momentum is bearish. Conversely, a blue cycle would say, hey, okay, the momentum is bullish. All right? This together with this is the pullback, right? There's the divergence. The normal thing for this green line to do is to pull away like a slingshot. So now you're pulling the rubber band back from the slingshot. You're going to pull it away, and ultimately the green line is going to go into the cycle. They're going to touch. And what's going to happen is price is going to follow. And when these 2 guys come together, this is where we take profit. This is where we close it out. Okay, right here. Why do we do that? Because the normal thing for the market to do is the green line to pull away, get into the cycle. Pull away, get into the cycle. Get away, pull. Keep doing that until what? The momentum turns bullish. And then we're looking for bullish divergence, or that green line to get underneath it. Okay, pulling away. Get back into the cycle. So what you end up doing, right? Selling this top, selling this top, selling this top, buying this bottom and buying this bottom. And every time that cycle, okay, that green line gets into the cycle, this is where you're taking profits. That's why it all exists down here. Okay, right in the slingshot. Okay, this is telling us the momentum's down. Okay, this is telling us the momentum's up. Okay, and furthermore, when you have a good slope to it, it's not only the color, but you should get excited when you got a nice slope to it. Okay, because if this is going down at a 45-degree angle, okay, that's telling you that the strength is pretty weak there. Okay, and conversely, if it's going the other way, this will say, hey, you know what? It's got some momentum behind it. All right, so slope is just as important too. All right, so that's why it trades. That's why that exists down here. That's where the trade. Now, as outlined here, every trade has an 8-tick stop attached to it. So if this is day one, if you're trading the gold or the crude, because you're going to see that, you're risking $80 a contract if you're dead wrong. If you're trading the YM, which is the mini Dow or the euro currency, you're going to be risking closer to $40. If it's the S&P or the soybeans, it's closer to $100 if you're dead wrong. Okay. Along the way, you're going to learn aggressive risk management. Okay. So what that means is when that green line gets pulled away and we get into the trade, okay, as this green line gets into the cycle and price goes going down, going down, going down, going down, we are going to trail our stop, trail our stop, trail our stop along the way until these come together and we just close the position out, or we eventually just get stopped out. Okay, so what does that mean? Well, let's see. Aggressive risk management, you're on a 4-tick range chart, you're looking at the market under a microscope. You're going to be potentially doing a lot of trades. Okay, you're going to be in and out, winners, losers, scratches, stuff like that. So you'll have to be glued to the screen. Okay, this is not something you're going to walk in, take a look at, set it and forget it and walk out. You have to be engaged in the marketplace. Okay, you'll have to be staring at the screens. Okay, you're not learning to pick the top here, and you're going to not learn to pick the bottom and trade from point A to point Z. You're learning to take a piece out of the middle. That's what you're signing up for. Okay, and like I said, move the stop, move the stop, move the stop until that green line gets into the cycle, and then it starts all over again. Okay, so you're learning to scalp. Okay, now what Dwayne's doing with Logic 247, yes, it can be done on a larger time frame. Okay, the same rules apply. Okay, you're just on a 30-minute chart or a 5-minute chart. Okay, the same rules apply. Okay, so when you get the cross, whether it's a bullish or bearish cross, that lights the match, right? When the MA1 is crossing the BBC, okay, that's when you get ready. All right, you look for the normal thing to do, for the market to do. What is the normal thing? For the market to get back to the BBC or the green line, right? And then along the way, I don't know, let's just take a look. And along the way, you draw a trend line. And at some point, you will close below the trend line. Okay, that's not a close. That is a close. All right. That's your close below the trend line. We have a red MA1, so that's good for the home team, right? And we have that separation. It's there. Okay. And then ultimately, what do we expect the green line to do? Get into the cycle. And what will price do? Follow along. And that's at this point when these come together, you close out the trade. Okay. So it can be done on larger time frames. Okay. In the training room, you're just learning to trade it on a 4-tick range chart. Okay. So if you like, scalping and a little bit picture stuff, there's a little bit of everything there. All right. So that's the trade setup. Okay. That's what you're signing up for. The number one thing, and it's the number one trap that people fall into. Okay. Before this all takes place. Okay. When we get step one, when that match is lit, there's one thing that needs to be happening, and that is the market better be trending. And that's the number one trap that people fall into. They have no clue that they're inside a sideways market. Okay? And I'm going to show you one way to avoid that. Okay? So, if we get a bearish setup, we better be making lower lows. If we get a bullish setup, we better be making higher highs. If not, no trade, period. If you have questions about it or not sure, it doesn't look like it, again, no trade. All right, make sure it looks easy and obvious before you push any buttons. That's what I would do. Okay. Now, Michael's more aggressive in the training room. Okay. So I'll show you some examples of that, but the ideal is everything that I just went over, okay, you'll see. Okay. But like I said, and fast forward. All right. So let's do this. Let's get inside the live market and see what we can do. In fact, I got some position. Let me get rid of the live account. And I'm going to get into demo mode because I have some stuff in the live account that I might mess up. All right. I got Bitcoin up here. I don't know why, but daily, we're on a 4-tick range chart, right? That's the time frame. All right, so let's take a look. So let's break it down. Okay, here's our bullish cross, right? So that's step number 1. So the question is, are we trending? So here's where here's the trap that people fall into. So when you're in the training room, you're looking at Michael's charts under a microscope. There's about 3 or 4 or 5 different charts floating, right? And they're blown up pretty good. Okay. So what happens is you gotta get hypnotized by, what you're seeing directly in front of you, right? Here's the solution. Okay. See this little zoom out button? This red magnifying glass? Get in the habit of zooming out. Okay. Because you'll get to see what's going on to your left. Okay. What looks like a market that might be trading sideways or might be trending may actually just be caught in a larger sideways channel, and you don't even know it. All right? So get in the habit of hitting the zoom out button. Now, first observation, dynamic resistance at an old high, right? That would say, hey, stand at parade rest, don't do a thing. Okay, we got resistance. What's cool is that we broke dynamic resistance. These green and red dots are dynamic support and resistance. If you're not sure that a market is trending, these guys will help you. Okay? So if we start breaking support or resistance, and we broke resistance here, that can give you a clue that, hey, dude, we're trending now. Okay? We were caught sideways here. Now we're breaking out. Okay? So we have the bullish cross. The MA1 is blue and crossing the BBC. Okay, we're looking to buy dips at this point. That means I'm going to get inside the green here and left or right click. Okay. The normal thing for the market to do, which is step number 2, is gravitate toward the BBC. The BBC is that green line. So that's what we are going to look for, the normal thing. All right. So let's blow this sucker up. What else did I say earlier? After the cross, engage the trend line. Why do we engage the trend line? Because we never know if it'll get back to that BBC. Okay, so our trend line is engaged, and you do that by left clicking on this little button over here on the left. Okay, now as this market starts going toward the green line or that BBC, I'm going to start drawing. It takes 2 candles to draw a line. Okay, so I need a couple candles. All right, so let's do a little foreshadowing. Our eyes start gravitating toward the slingshot, right? What color is the cycle? It's blue. We're looking to get long. That's good for the home team. Okay, right? So we got the color we're looking for in the slingshot. Not only that, look what's happening down there. The green line is already starting to pull away. So we're starting to develop step number 3, which is that separation or the divergence. So everything should be in play here, okay, for us to get long. Okay, so let's see. So we're just waiting. So if it starts pulling back, we're going to draw a trend line. Okay, and I'll show you how to do it. Okay, there's one. We need another one. Notice now we're building the separation. Okay. You get another candle. I'm going to connect the dots off the tops. Okay. It's going to start with this shoulder. Okay. I'll show you if it does it. I'm chewing ice. I'm sorry. Give my throat a break here. Just waiting for the pullback. See the separation? We got blue cycle and the green line's underneath. Okay, so that's good. Okay, so if it qualifies, okay, I'm going to try to left click in the DOM here. Okay. I don't want that on. Okay. Let me, while that's happening, let me show you one cool thing about the DOM. Okay. All right. Notice what I just did. I hit this Tinker Toy triangle up on top. You notice how the DOM opens at the bottom there? Okay. This is called the bracket. Okay. That means as soon as I enter the market, it's automatically going to put that 8-tick stop that I advertised earlier. Okay. We don't have to push any extra buttons. It's going to do it for us automatically. That's a cool feature because that's one less click that you have to make. In the heat of battle, you don't want to do a bunch of clicks, okay? Because chances are you're just going to screw things up, okay? So if you check the buy stop and you check the sell stop, just these two buttons here, okay? And you right-click over the word sell stop and buy stop, and you put the factor in ticks. We knew every trade has an 8-tick stop attached to it. That's where the number 8 goes. So if we get in the market, our stop is going to be automatically 8 ticks away. Okay. So if that happens, we'll do something about it, and I'll show you how to move it and how Michael's moving it inside the training room. All right. So if we have another down candle here, okay, the trend line would look something like this. Okay. It would look something like that. But we need it to unfold here. All right. So there it is. Just do this. All right. So two things are going to happen. We're going to pull back to the BBC and we look for a green candle, or we will close on the other side of this trend line. If we close on the other side of this trend line, we're going to get long. If the low is 3105.75, the high must be 3106.75. So if we want to be proactive, all right, we put the order in at 3107 and right click. Okay, so the magic formula is plus or minus. All right, so we had the up close. I don't know why it didn't get filled, but here. Okay, here is the up close. I just got in at 3106.75, and our stop is 8 ticks away. Okay. Rules of engagement. Here's our stop loss here. All right, no matter what happens from this point, everything is fair game. Okay. The green line has pulled away, and we're expecting the green line to ultimately do what? Get up into the cycle. And in doing so, the normal thing for the market to do is make a new pivot high. That's what we're expecting. If it doesn't, we just lost $100. Okay? Let's see what happens. Money management. Here we go. If it goes plus 4 ticks in our favor, if it goes to 3107.75, we're going to move our stop to break even. Okay? If it goes here. And how we do that is this. As I said, this is our stop loss, right? All you do is left click over the number 1, hold the click down, and drag it. Release it. Left click over it, drag it, release it. Okay? That's how you do it. All right? So if it goes plus 4 ticks in our favor, or closes on the other side of the MA1. The MA1 is this line here. Okay, we move the stop to our break-even point, or our entry. Okay, so we're waiting. Ignore this red and green thing. I don't know what the heck that is. It's not something I coded because I don't know how to code. I just know how to turn on the computer. Me chewing ice again. So we're just waiting for the market to go up. Okay. And again, the normal thing for the green line to do is to pull away and then get into the cycle. Okay, these two guys will meet each other somewhere, hopefully, and then we get the heck out of Dodge. Okay. Okay, to break it down again, we had the bullish cross here. Why is it bullish? Because the MA1 is blue, and it's crossing the BBC. The next question was, are we trending? Once we took out dynamic resistance, we could then at that point say, yes, we are trending. We couldn't say that here. It had to be above dynamic resistance. And again, if you're not sure if we're trending or not, dynamic support, dynamic resistance will help you along the way. Okay? I'll show you more examples once we get out of this thing, win, lose, or draw. Okay? And is everything the same color? Yeah. So I can't rule this one out. I can't poke at this one. So we're just waiting for the market to go up. So in fact, instead of watching, well, here we go. So there was that up close. Okay, that was a close above the trend line. Okay, so watch, above the MA1. So I'm going to move the stop to our entry. The stop is at 31.0675. It's our entry. Okay. Okay. We got 4 ticks in our favor. Where's the green line? It's approaching the cycle. Let's move it up. Let's start trailing it. Let's trail a little bit further, and I'm trailing it because why? The green line is getting into the cycle. Okay. Again, ignore this. This, I don't know what this is, so please, I don't know what it is. That drives me nuts when it pops up. So, worst case scenario, we make 2 ticks. Okay. And we're out. 2 whopping ticks. Okay. But everything was there. Okay. Everything from start to finish was there. The bullish cross, it pulled back to the BBC with the up close. We drew the trend line. The cycle was blue. The MA1 was blue. And we had bullish separation. We had the highest probability set up right here. Okay. So that's why we jumped in there. Okay. And the normal thing for the market to do is this green line to get in and for the market to make a new high. Maybe it does it, but it's going to do it without us for the time being. What we can do is manage the trade. Get into it and get the risk off the table. That means get that stop to break even. Okay? All right, let's move on. I'm going to switch guns and maybe go to the crude oil, okay? This crude's been rocking and rolling. Okay. Zoom out, zoom out, zoom out. Okay, here's a good example of what I was just referring to. Okay? Dynamic support and resistance. Okay? Notice how it's side by side here. Okay? It's not until here we can say it's breaking out. Okay, 1 second. There's my phone buzzing again. All right, I'm back. All right, so it's not until now we can say, hey, the crude oil is starting to trend, okay? And we recognize that by hitting that zoom out button, okay? So get in a good habit of doing that. So let me get rid of these drawings here, okay? All right, so until the crude can make a new pivot high, okay, we want to look from the bullish side because we have the bullish cross here, right? And we broke the trend line. It looks a lot like that S&P trade, okay? But, you know, we've stalled here a little bit, so we would have to make a new high before we can get excited about getting long, okay? Let's go to natural gas. Why natural gas? Well, on Thursdays, we have an AGA report that tells us the supply of natural gas. It's a mover and a shaker. I know the personality of this market pretty good, so that's why I'm showing it to you. Notice the first thing I do is zoom out. Okay, again, that'll keep you out of that sideways. Holy smokes, I got caught in a sideways market trap. Okay, so for the moment, we have a little double bottom here. So the natural gas is going to have to make a new low before we can get short. Gold. We have the bearish cross here, right? So we should be looking for bearish opportunities. I'm zooming out. My only problem with this is that we did have some support here. Okay. Yes, we have the bearish cross. And yes, we got a pretty good sloping red cycle here. Those are really good things to get excited about. Okay. But we have to, this one is not so easy and obvious. Okay. There's some support here, and we acted pretty strongly off that support. So I would, until further notice, I would put that at parade rest. Okay. Did we miss out on anything in the ES? No. Okay. So no biggies there. We'll go back to that one. Let's go to the currencies. Okay. Here's something real cool. Zoom out, zoom out, zoom out, right? Okay. A few things are happening here, which this is trap number 2. Okay, so notice again, let's talk about trending again, because that's a big thing. Okay, if you're staring at this, back then, okay, no, we're not trending. Okay, we break dynamic support, now we are trending. This is our first pullback to the BBC after breaking dynamic support, agreed? Okay, draw the trend line. Okay, now, 2 things that are hitting us right in the face that I'm going to take note. Number 1, first of all, we need a down close. Okay, so we need a red candle. Why? Because we had a bearish cross back here. So we're looking for a down close. But if we get the down close, okay, what's happening here? Number 1, the cycle is a different color. We said we want red in a bearish environment, right? This is blue. So the first thing that goes off is that blue cycle waters down the probability. Okay. Number 2, look at the slope of it. Not only is it a different color, it's at a 45-degree angle against us if we get short, right? And we just said earlier, hey, we like it when it's the same color going down at a 45-degree angle. Okay, this means you're really swimming against the tide, okay? If you're faced with this, okay, a different color, but then starts curling up at a 45-degree angle, that's disqualifier number 2, okay? No trade, okay? Now you're going to say, hey, well, Michael's taking trades in the room when the cycle is blue. That is correct. If they are a different color, well, Dwayne's lighting up the logic here. Hold on. It's fair game if it's a different color, but the cycle must be flat. Okay, it can't be curled up at a 45-degree angle. It has to be flat. Okay. The other thing too is, if you do get a blue cycle, this trend line is required. You have to draw this trend line, and you're going to have a close below this trend line before you could take action. Okay? So, we get in the habit of drawing trend lines because we never know if it gets back to the green line, correct? The other reason why we do it is because if the cycle turns color on us, then the trend line is also required, but then we'll need a close below the trend line to execute or take action, okay? So what you do is you just get in the habit of drawing them. So if this does happen, this is after the fact, but if it does happen in real time, okay, if it does and all the rules apply, all right, then again, you're in a position just to get inside the DOM and push a button. Instead of fumbling around trying to activate the trend line and draw it, get in the habit of doing it in advance. So if this happens or we quite can't get there and we just fall apart, man, you're going over here and you're getting short. Okay, so create that good habit. So for the moment, number one, we need a red candle. Number two, this is a big fat disqualifier because it's pointing up against us and it's at a 45-degree angle. Okay, that's the second trap that people fall into. The trending one is the biggest one, but that's the second one. Okay, I don't know if it's me, and I know that when everything's the same color, and it puts all the favors in my, puts all the probabilities in my corner. I don't know, maybe I'm just taking those ones that stack up correctly, but that's just me. Okay, so that was a good one. I'm glad that happened. All right, because that was kind of real time. All right. Again, the British pound pulling back to the BBC, but we need a new swing low. Dynamic support was broken because that lets us know, okay, maybe we're back on the trend, but we need to make a new pivot low. Okay. Swiss. Okay. Here's an example of that, okay? Ignoring everything else, we draw the trend line because we don't know if it'll get to the BBC, okay? It does turn color on us, so a close below the trend line is required. It's not this candle, it's actually this candle that lights the match. Why? Because this turned blue on us, okay? It doesn't have that 45-degree angle. It's starting to curl up. I'm not taking this. Michael probably is. He might be rewarded with a break even or a +1. Okay. But again, flat by the rule set, flat is okay. 45-degree angle is not okay. Okay. The takeaway is get in the habit of drawing a trend line. Okay, then you can go from there. Okay, that's a big obstacle for people. How to activate this and then how to draw it. Okay, how to draw it is, if you have a wick, use wick. Okay, use the bottom of the wick and then the body. Okay, it just takes practice. So for the time being, I would say, look, if we get another candle up, start drawing a trend line as it gravitates toward this green line. Okay, zoom out, zoom out. That one's not so easy and obvious. Here's a perfect example of sideways. Tops here against dynamic resistance. Support, dynamic support, back and forth. Okay? That's not good. See, my point earlier was this. If you blow the sucker up, you might see this. Bullish cross. Pull back to the BBC. I draw my trend line because that's what I was trained to do. And here's the up close. Hey, it's bullish and I got separation. Get long. Okay? Yep, in the end, it probably rewarded you with something, right? But zoom out, zoom out, zoom out. I'm not surprised that we're chopping around here You probably was a break-even trade, but the reason why you ran into that grief is because actually we weren't trending. Okay, this, yeah, I don't blame you. This, no, I'm not touching it. Okay, so again, laboring the point, hit the zoom out button, damn it. Okay, that'll keep you out of that trap. And when in doubt, stay out. 765. All right, hold on. Let's see who this is. One sec. Oops. Okay, let me make a point of something here, okay? Just got off the phone with somebody. He's getting frustrated with the ES, okay? We are not trending right now, okay? We're sideways here, back and forth, okay? Dynamic support and resistance, back and forth, okay? If you're getting chopped up in this area, this is why, okay? Stop it. Quit pushing buttons, all right? We're sideways. So right now, you shouldn't be monkeying around with this. Right? The house loves you because you're probably trading a ton, but right now, I'm telling you, this is back and forth action on a larger scale, okay? There's probably some opportunities on this 4-tick range chart because you're looking at the market under a microscope. But right now, okay, there's nothing going on. So stop it. All right. All right, let's go back to gold. All right. So look, we're getting the pullback in the gold, right? We have the bearish cross and we're starting to pull back to the BBC. Okay? Those are all good, healthy things. We have dynamic support printing and we have some prior lows looking left. Okay? We identified that by zooming out. Okay? So no, I would not take this trade. Okay? Even though we have a red cycle, okay? This one could be that sideways chop I was just referring to. So my opinion is stay out of there. Crude oil. Okay? You might say, hey, there was that pullback to the BBC with the up close. Okay, I agree. It finally did the normal thing, and if you were a good student, you would have drew the trend line, and that would have been an up close, considering we had a red cycle. Okay, but again, in all fairness, top here, we weren't trending. Okay, if you got long here, great. You got lucky because the market expressed itself. Okay, but in all fairness, we weren't trending. We needed to get above this high before we can start looking at the long side. Okay, so it had a lot of the variables there. There was a good reason to point to it, and I think the thing is, okay, we get so hypnotized by looking for the market to get back to that green line. All right, but really need to make some new pivot highs. Okay. Okay, it's a euro. Okay, no, nothing there. We might be at a stalemate here, guys. All right, I think we are probably stuck here for the rest of the day, or at least for the next 5 minutes. So I'm going to wrap it up. All right. So I would say this, summarize. Number one, if this is your day one, here's your template, here's your syllabus, here's your cheat sheet. This is the trade setup going on inside the training room. Okay. It's also in the handout section of the GoToWebinar when you go inside the room. Okay. The other thing, okay, one of the big traps that people fall into is they get in the habit of getting trapped in a sideways market. One solution to that, zoom out, zoom out, zoom out. Okay. What looks like trending action may be sideways action when you zoom out. That might be the difference of making, losing, or getting stopped out on a trade. Okay, so please get in the habit of doing that. The other habit of getting into is drawing trend lines. As soon as you get that cross, whether it's a bullish or bearish cross, activate that trend line and start drawing. Okay, and if we have to, as I said earlier, we kind of spoil you at the desk here, but if you want to draw trend lines and then send me a screenshot at what you're drawing, do it, and I'll critique what you're doing. Okay, we'll do that. Make sure that you're drawing the correct trend lines. Okay, and the next part of it is the money management. Okay, remember to set your DOMs, set those brackets, so those stops are automatically placed as soon as you get into that market. Okay, you got to have some discipline. Okay, it starts with that little thing. Okay, and that's it. So we meet every Thursday. Okay, no, we're not going to meet next Thursday, but every Thursday for an hour we go over the setup. I go over the same things over and over and over again. Okay, the idea is to hammer those few things. So if you can take those few things and kind of embed them in your brain, maybe that tips the scales. Okay, if you're brand new, this was a good way to get to know what you're getting into. Okay, like I said, for Mike's in the training room for 2 hours. I took just one trade that was pretty easy and obvious. Okay, we made a few ticks out of it. Okay, nothing to shake a stick at. But between 8:30 and 10:30, there's going to be news and things moving. So there's going to be plenty of opportunities in that 2-hour span. So if you can pay attention, that would be great. Okay, ask questions. That would be great. Download the platform. That would be great. And the indicators. And if you are having a problem doing all that, you got a contact person, okay? Just call me or shoot me an email and we'll do a one-on-one GoToWebinar together if we have to, okay? So that's it. That's my scoop. That's my story. That's my show. Good night. All right, we'll see you in the morning. And if not, we'll see you next Thursday.